Welcome back to another episode of Profiles in Risk, and I'm your host today, Wesley Todd, the CEO and founder of CaseGlide. Your usual host, Nick Lamparelli, he's in an undisclosed location. So you have Rob Galbraith, who's the most interesting man in insurance, and now you have Nick Lamparelli, the most mysterious man in insurance. But he told me that I could run the podcast today, so whatever, that was his choice, and he's going to have to live with the consequences. And I'm not the one to really worry about it. I think it's more David. All jokes aside, this is the latest in our series about innovating throughout the industry. And actually the word is innovating within the industry. And what Nick and I have been doing the last few have been talking to CEOs and executives about their experience managing large insurance companies, and it's kind of turned into a Florida insurance company thing. But in reality, what we were seeking to do is talk about innovating in insurance. It just happened to be we were able to talk to like C-level companies that had built companies out of thin air into multi-hundred-million-dollar companies. But the impetus for this series was actually to talk about two themes, and we're going to talk about those today with David, who I'm about to introduce in a minute, which is innovation in the insurance industry coming from within the folks in the industry, and then how kind of all the marketing in the industry, especially on the technology side, is really kind of missing the point about being people first and technology second. So those were themes that were brought into those previous podcasts, and they're going to be a theme today. And, you know, the people component is going to be huge. David's going to talk about his experience with that as well. So we're very pleased to have our guest today, David Macklow with Gramercy. How are you, David?
I'm great, Wes. Thanks very much for having me on your podcast today. I'm very excited to be here. I've listened to a few. You guys have got a great following. You've had some interesting topics that I think have just been great for your listeners to explore. So I'm excited to be part of this. Thank you.
And we're excited to have you. So I think it's just going to be a really good perspective. I've been following, you know, when I'm not learning from Nick's podcast, I'm learning from you telling me things. So it's going to be perfect. So I'm going to read your background. I'm going to do my best at it. So David is the head of strategy and corporate development for Gramercy Risk Management. And David has spent 25 years in the industry in a number of areas. He started his career as an underwriter at ACE, which is now Chubb, before he moved to the U.S. to pursue a career in structured finance. So he was one of the group that formed Aon Capital Markets, an early pioneer in the insurance-linked securities market, which we're going to talk about today.
Easy for you to say, right?
Yes. Well, I tried to go too fast. So David's career transitioned into a more traditional investment banking career, which was raising public and private equity for insurance companies, you know, M&A consulting, and helping public and private investors in the insurance sector. So what David's doing now is he's returned to a more traditional role as head of strategy for Gramercy Risk Management. And Gramercy is very well known. It's an insurance management company providing an array of underwriting, claims, and litigation management services to people in the industry. And David's goal and role is delivery of those services to insurance carriers, program underwriters, and investors. David, once again, welcome to Profiles in Risk.
Thank you very much, Wes. I'll give you a chance to take a breath there after that long intro. I appreciate it.
There's just so much pressure with Nick gone, you know? I mean, it's like, because he rates the bar so high and he's practiced, you know, he's on 200 plus podcasts, so it's just not fair. So I'm just going to mimic Nick. Nick loves to find out the backstory. What is it? You know, a lot of people didn't get into insurance on purpose. How did you, David, arrive in insurance?
Well, like probably a lot of people, it wasn't a career I chose in college. It was sort of more by accident. I was working in Bermuda for a bank, and I had become a chartered financial analyst. I was one of the first CFAs ever to receive their charter in Bermuda, and a good friend of mine was the CFO of a relatively small insurance company called ACE. And everyone's heard of ACE now. It's called Chubb. But back then, he asked me to come on board as a financial analyst to help them get a new insurance line off the ground. And I spent my first 5 years in the insurance industry, sort of doing structured reinsurance transactions for ACE out of Bermuda. And I was lucky enough to see some really interesting and cutting edge deals, if you will. People were looking to use insurance as a risk financing tool in a slightly different way than just traditional insurance. So I got to see a lot of fun things, and eventually that led me to my career in the States.
Awesome. So I did a little bit of discussion on Gramercy Risk Management. Can you talk to me a little bit more about the background of Gramercy and help the listeners? It's really unique. This is a very unique business, surprising, exciting. I talked about it some, but tell me what else everybody else needs to know about Gramercy.
Yeah, I think it is a unique company. And when I imagined what my career would look like later in my career, I didn't really think I would end up working for a firm like Gramercy. And that's sort of a strange statement. I had spent 20 years being, if you will, at the cutting edge of a lot of really interesting innovation in the industry. And then I met Gramercy in 2014, and they had just come off the sale of their predecessor company called Wright Risk Management. And I was so surprised. I had never heard of Wright before, and I had spent a lot of years as an investment banker, and I was shocked at what they had built. It was a company, a lot of people probably haven't heard of them, although they may have heard of them because they owned a flood insurance business. But in 2014, when they sold their company, they had over $1 billion of annual premium, and they had over 550 employees. So I was really struck when I met the founders that they built this really fantastic organization. And as I sat down with them and got to know them better, what really appealed to me was the fact that they took a great deal of pride in building a company around really sort of a unique focus on underwriting the old-fashioned way and doing claims the old-fashioned way and managing, if you will, litigation the old-fashioned way. And it was an art form that I thought had been lost in the industry. And as I sort of thought about my long career and all the things I had seen going on, I sort of saw an opportunity where those skills were in demand. And after talking to Bill Fischlinger, the founder, I was absolutely convinced that there was a shortage of great skill sets in the industry that Bill's new company, Gramercy, could fill, both in terms of providing services around underwriting, around claims, but importantly for the topic of our discussion today, sort of dealing with the innovation that goes on and dealing with some of the bigger issues in the industry, like technology around claims management, technology around litigation, new emerging business models where you need expertise from third-party service providers. I was really in awe of what he had built, and I could see a huge set of opportunities to deploy those skills.
Perfect. You know, spoiler alert for the listeners, you know, David's going to talk about all phases and facets of the insurance life cycle, from underwriting to litigation to closures. And I would guess that there are a good group of flood people on that listen to this, because Nick's business is flood. So I think that, you know, the Wright flood was, you know, is really kind of the biggest case study in flood of all time. Very interesting business there. So David has, you know, the folks that ran that, right, in his organization. So everybody's talking about getting into flood. They're just waiting to figure out when, and they're kind of dipping their toes in the water. So David's a resource on that from a peril standpoint. But they also do construction and some other things too, municipality work, you know, liability. So you're getting it all here today on Profiles and Risks. So Gramercy's the engine for all that, but David's the guy piecing it all together with the market. So,
and Wes, maybe a little bit more detail about what we do for our client base. So when you think about the formation of Wright many years ago, Wright was started because there was a crisis in a sector of the insurance industry. The state of New York could not provide insurance for school districts. And what the founders of the company decided to do was essentially build a mutual, an insurance company. And when they built the statutory entity, they said, well, we need some staff. And Bill, the founder, had been working for an insurance defense firm. So Bill started looking at the needs for this statutory entity through the lens of claims and litigation, because he spent all of his career defending insurance companies from claims and litigation. So as he built the management platform to run these insurance companies, and remember, they were in really tough classes of business. Clients with complex risk management needs, really tough exposures, frankly, exposures that the rest of the industry was running away from. He had to take a great deal of care in building something that really managed all aspects of these insurance companies in a really unique way. So then when I said Gramercy is somewhat unique, Bill built a company, a management platform through the lens of a claims expert. And he built it through the lens of thinking about the claim as though there was a plaintiff attacking the insurance company to try and get their money, because he was a defense lawyer. So the company has built itself a management platform really focused on understanding how to deal with claims and how to deal with lawyers that bring claims against the insurance company. And that makes us a little unique. The other thing that makes us unique is we have this affiliate law firm company that does our insurance defense work for us, but also manages all the third-party litigation that we have in-house. So oftentimes when we go out and talk to participants in the insurance industry, I sort of have to remind them that we're not just a TPA. We're not just a law firm. We are an integrated insurance management company where we look through and analyze problems for our clients through many lenses, whether it's underwriting, risk management, claims, litigation management. All those things are equally important to us, and we can put our TPA hat on and then take it off and put our panel member hat on, and take that off and put our risk management hat on, and look at the industry through a lens that is very broad, rather than just the sort of cookie cutter approach that many insurance companies use of, I need a TPA or I need a law firm.
Yeah. And I mean, that's what matters is for for the Insurance Nerds podcast, the folks that I know, they're all trying to make a big impact in this industry, and they're fishing for as much info as they can. That's why Insurance Nerds has been so successful. It's because it's hard to get information on the industry. So this is just a great story about going where the problems are, but you have to be an industry expert, or not an industry expert, sorry, but you have to be in the industry to know where those issues are. And you can have a successful business. It started with the school board, then it went on to flood, it went on, TPA, it went on to law firm, or actually it started with the law firm and went on to these other businesses. So as you become an expert, you go that route. And that's when I called Nick last year and said, I want to talk about this, that's really what the points I wanted to get across, because my personal experience was that I wouldn't have seen this. I have the technology, a Case Glide, we have the technology, but I would have been useless, wouldn't have saved any money if I wasn't attacking a big problem in the industry. And so all these people that are working so hard to tackle problems, I just want to help make sure that they're focused on industry first, people first, solving problems for the folks that are in this industry, because forcing your technology on them, and it just doesn't work. I can promise you that. So, all right, bringing you back to when you were a younger professional, what do you wish you would have known, before you got going, that would have helped you more easily become a, high-level executive at Gramercy? What would you want to tell the people in the audience about advice, from an advice standpoint, about how they could be more successful faster? That's what everybody wants.
Yeah, no, I absolutely think that's true. Everyone wants to figure out what's the secret sauce for the industry. I think it depends on your sort of personal goals and careers. And I'll say that because 20 years ago, my advice to somebody in the insurance industry was join a larger firm and get into a sort of, if you will, a management program or management training, and then work your way around the insurance departments and figure out whether you want to be an underwriter, a claims person, a customer advocate, and do different things within the insurance industry. I say less of that now because I think there's huge opportunities for entrepreneurship. And that's hard for young people, right? It's difficult to join smaller firms or even start your own firms when you don't have knowledge of the business, right? I just talked about how challenging the environment was for when we set up our predecessor company. But there are much more entrepreneurs now than there ever were before. There are much more people like you, Wes, who are thinking about the industry and trying to solve problems that maybe 30 years ago we would have said, oh, we'll just go to Travelers and Travelers will be our answer for this problem. So I think for young people, they should be open to looking for entrepreneurship opportunities. So interning at firms where maybe they can get some insight into an insurtech opportunity, interning at a law firm to maybe see if they can enter the law and defend insurance companies, interning at an insurance broker, a smaller regional broker, understanding customer interfacing. I think there's a lot of opportunities for people to early on in their career to touch a lot of different places that maybe 30 years ago they wouldn't have done. And I would tell you that I think there's now much more of an opportunity for people to own their value, that 30 years ago you wouldn't be able to make money, a lot of wealth, if you will, or have a lot of personal satisfaction because you would have been in a large organization and you probably would have had to work 30 years to get your pension. But now there are opportunities to really build value around what you own. And I would encourage any young person not to just sit inside of a large organization and do the same job every day, but look for opportunities to build value through smaller firms where specialization will create immense value, much like what you're doing at Case Glide.
Yeah, you're exactly right. Like before I did this, I had to work at a 500-person law firm, right? And I had to go through the hassles of having, hundreds and hundreds of cases, and I did a great job because I was very committed. But to your point, you want to be looking for your opportunities elsewhere, even if you never leave. Maybe you love your job, but you always want to be exercising that brain muscle because that'll help you do a better job even in the job you're in, right? Like when I was there, I was thinking about, well, if I ever did leave, I would need a client base. So, I never did that. Yeah.
It's interesting now because now you could go into the insurance industry and have a set of skills that maybe 20 years ago wouldn't have mattered. So when I came out of college, having a perspective around technology wasn't going to help my career. I had to have a background in law or accounting. But now there are very successful people in the insurance industry who have some understanding of the insurance world, but are folks who built interesting process apps or customer interface technologies, or new policy binding systems, or just even customer experiences through technology. So kids coming into the industry with technology familiarity have an advantage over people that would have come in 20 years ago. I don't think people should lose sight of that.
Yep, and just make a pit stop in the industry and work at even if it's a big firm, with an eye towards providing so much value there that you become too big for that opportunity and you go do your own thing, where appropriate. So, all right. So there's two big things I want to talk about with you, David, on this call. That was very good background. I think really good to help people understand your perspective. Wanted to get that squared away, just get the advice standpoint out in case anybody, their treadmill, they were up at the gym and now they're done and they shut it off. So the two things I want to talk to you about are having been in a organization that's a perfect example of finding $1 billion problem and solving it. How do you go about identifying opportunities in the insurance industry? And I have a couple comments on this before you get going. So definitely keep thinking about it. You have the massive companies in the world, the Travelers, like you mentioned, the Progressives, the Berkshire Hathaways, the AIGs. How in the world were you able to be at a firm that came up with insurance-linked securities? How was that not part of the bigger companies? And then how in the world were you at the firm that said, we're going to be the people that do the municipal work, or we're going to be the people that do the flood work? Because if in any other industry, well, I won't go that far, but especially in insurance, you would think that these companies with billions of dollars, billions of data points, and hundreds of thousands of employees, literally, those are literal numbers. You would think that there would be no opportunities in the insurance industry. It doesn't make sense. So with all that being said, how do you and Gramercy, what would you tell the people on this call who could be your competitors one day, but I think, what you're trying to do is pay it forward. How could you tell them to think about what problems to solve in the industry that are the most lucrative and most rewarding?
You said something, Wes, and suggested that, probably quite rightly, that you would think there would be no opportunities because we have these big sophisticated firms that are already out there. We know their brands, they're everywhere on TV, and you think, oh, wow, if Travelers is that good a company, then why would there be New York schools that needed insurance? And the reality is it's because they are large companies. They don't tend to be as easy to sort of turn in a direction to solve an industry problem. I always find it interesting. Insurance companies are risk managers. Well, one of the things I think is the most difficult thing to do is to get them to take a risk on a new way of thinking, a new way of doing a product, a new way of thinking about a risk, a new way of processing. There's an awful lot of embedded sort of structural features within the insurance industry that require things to be done the same way thousands and thousands of times. So oftentimes you get these big, large, monolithic companies that are more concerned about defending what they have rather than innovating themselves into new lines of business or effectively trying to destroy their own business model before someone else does. So when I left Bermuda in 1996 to go and work in the States in structured finance, my first job was working for Aon Capital Markets. And Aon Capital Markets created insurance-linked securities along with a few other banks like Goldman Sachs and Swiss Re and Morgan Stanley. But at the time, doing insurance-linked securities was seen by the industry as an absolute competitive threat. And everyone in the industry to prevent any development of insurance-linked securities. In fact, people laughed at me when I left Bermuda and said, this is going to be the wave of the future. And I got sort of laughed at for being an idiot for believing that somehow securitization would change the market structure of the insurance industry. And lo and behold, here we are 25 years later, and not a story goes by where people aren't talking about the role that ILS plays in shaping the market structure. So my point of that story was there are people out there who are willing to be persistent and look for opportunities. Sometimes they take a lot longer to reel those opportunities in, but I think as that sort of pace of change has gradually picked up, more and more opportunities are popping out. So what might have taken 20 years, like ILS, is now becoming a shorter sales cycle. So another example, the runoff industry, an industry that in theory can really use the sort of services that companies like yours and ours sell. 20 years ago, the runoff industry was sort of looked down upon by everybody. And what people didn't really see was that a transfer of old claims from an insurance company to another insurance company might create a capital, a benefit to the seller. And as a result, you might have a way to manage risk that before you wouldn't have looked at and thought about. Well, now here we are 10 years after having sort of everyone looked down their nose at runoff. We now have an industry that is rife with competition, lots of new entrants, tons of people coming in, lots of service providers. A blockchain. Now, there's another example. 5 years ago, we weren't talking about things like blockchain to change the industry. Now, all of a sudden, people are having realistic conversations about things like blockchain, which, again, 20 years ago, one person might have stood on a hill and said, we need to put things in a distributed ledger, and it would have taken 20 years for the industry to come up with, if you will, a group that would be willing to do it. Now that sort of stuff is happening at a faster pace. But back to your question, though, which is how do companies like ours look for those opportunities? Well, the opportunities are out there. And I think what I talked about before was changing in market structure. And in the old days, 20 years ago, when you were in the insurance industry, you had a client, you had a broker, you had an insurance company, and then you had a reinsurance broker, and then you had a reinsurer. Well, now we have all sorts of additional people in the middle of that food chain, right? The market structure has changed. Now we have a client, we might have an MGA, we might have a wholesale broker to a specialty fronting company. The fronting company might some of the product to a reinsurance company. The reinsurer might then sell it to an ILS investor and a hedge fund re. So we have a lot more, if you will, people in the food chain of insurance, from the beginning when the premium is created, all the way to the very end when the premium is essentially sold to the lowest price form of capital. And in between all those steps, people have specialized, right? They've specialized in being the fronting company or the underwriting company or the risk bearer at the end of the business. And what it does is it means that there are gaps for additional specialists to come and support that chain of premium and the participants in that food chain. So I actually think the opportunities for smart management, for technology to aid that process, to help lower the expenses of those processes, to make that a process more efficient, for specialty management to come in and support those activities. That world is much more open than it was before, and that's why I'm so excited about the role that Gramercy can play in the industry, and why companies like you are really poised for success. Because I think now, with all these smaller participants in the marketplace who are more nimble and are looking for services to support what they do, the sky's the limit.
That's fascinating, actually, because what you're doing is you're talking about what's changed, and then, which is very important, because if it's something stayed the same, then there's really no need for anything. But what's changed, and then how can you capture that value by saving somebody else a lot of money? Where's the biggest pain point? So,
and before, you wouldn't have been able to see those pain points, right? Because they would have been buried inside of a large carrier's financials, and you wouldn't have known, oh my God, they're paying way too much money to acquire a customer. Oh wow, there's a lot of volatility around a certain line of business with respect to their loss ratio. Or, oh my gosh, this is how much capital they have to hold against a particular book of business, and it doesn't generate enough of return. As all those pieces get pulled out of the larger companies and put into discrete participants, into discrete buckets, you can evaluate them. You can evaluate how good they are, how efficient they are, whether they create enough value for the people that are putting up money to pay for those activities. And once the people become specialists in their own segment, they then look for other specialists to support what they do. And in the old days, it would have been very difficult to be a specialist and support a large carrier. But now, with a lot of smaller participants in the industry, being a specialist is a service that's in need.
So I don't assume anything knows anything, because it is so specialized. You never know who's on this call. So I did a quick little notes. You got these are different thoughts going through your mind. Of course, this is just your experience, but of areas where innovation's available. The municipalities work historically was, I think it still is. The ILS, I think the same thing. These are changing, moving industries or parts. Runoff, so we won't go into too much detail on that, but runoff companies, I think, certainly present opportunities for innovation. Flood remains extremely, just extremely worthy of disruption. We all have to wait on legislation to pass, but once it passes, it's going to be a tidal wave of innovation. Blockchain. And then I really thought your last point was on, if you understand all the different players in the market, from risk bearer to broker, the ability to streamline that process, which will in turn allow them to do better work and save them money. So you have to understand that really well. So those are my notes for the listeners, and they can reach out to David Mocklau if you don't know any of those things, because just as to why there's the purpose of this podcast is you may not understand all those things or some of those things. Just email, Google us, and we'll send you over reports or whatever information we have on it. Because I agree with you. I think, from my understanding, my perspective, and Nick, I'm sure, would have a different perspective, and a lot of the listeners would, but those to me are the ones where there's opportunities for people to make a lot of money in insurance.
Yeah, there are, and we could talk for hours about some of the the more interesting developments in the insurance industry and things that will disrupt the way participants are shaping their business models and careers that will be built. There's an insurance company in New York that's essentially an incubator for electronic MGAs, digital MGAs. Can you imagine 5 years ago, there wouldn't have been a career for a programmer trying to figure out how to sell insurance for rentals, short-term rentals. The whole mobility the whole mobility sector with, with companies like Uber and Lyft and other rideshare companies, and the rental economy, consumer economy is going to create tons and tons of changes in market structure and opportunities for entrepreneurs and for established companies. It's just mind-boggling what's going on now compared to 15 years ago.
It keeps supporting my thesis or my theme of understand what's going on in the insurance industry first and then build your technology, because there's too many opportunities to count. But if you build the technology first because of your little microcosm of understanding of a much bigger thing, well, you're going to solve a problem that may not be top of mind for a lot of people. There's so many problems that need to be solved that are top of mind. So these are very, to the average person, these are very obscure things, but that's where the money's at. It's in the details. So I'm going to move on. We've held out long enough, David. You and I, when we get together, we talk shop on claims litigation. And this is what we focus on, what Gramercy focuses on, or piece of Gramercy focuses on, and what CaseGlide focuses on. And you have, like you mentioned, Gramercy as an affiliated law firm with similar ownership as Gramercy, the risk manager, and a TPA, third-party claims administrator, which is, by the way, another area ripe for innovation. And so you and I, when we get together, we talk about all of the change going on in claims litigation departments, all of the curved expenses going up for insurance companies in their legal departments, and how bad, there's no other way to put it, it's the worst business process in the whole company from what I've seen thus far.
I would concur.
So let's zoom in on one of those things that you brought up earlier, which is on the expense side and on claims litigation. Tell, for those people that aren't in claims and for those people that are, tell them what is the state of claims litigation in the insurance industry today in less than an hour.
Yeah, I would probably use one word. I would say it's awful. And I like to give this sort of story as an introduction to my thoughts about why it's awful. When I was an investment banker, I was involved in a new Bermuda startup company, one of these large billion-dollar companies. And I got to see the presentation that this particular entity was putting together for AM Best about their business plan. And it was chapter and verse and long, flowery sentences about the wonderful management team, the role the insurance broker would play in bringing them business, how they would underwrite, how wonderful their asset management strategy was to manage the assets, how good they were at risk management. And then in the course of a 400-page private placement memorandum, there was one paragraph on how claims would be handled. And I sat there and I thought, wow, they spent 400 pages, and a lot of that obviously was the lawyer's requirements for disclosure documents. But I sat there and I thought, wow, 400 pages about how this business was going to find premium dollars and underwrite premium dollars, and one paragraph on how they were going to do with claims. I tell that story because I think it is indicative of what goes on in our industry. The claims management piece way too often is sort of an afterthought for many insurance companies. It is an area that's largely viewed, I think, as somewhat of a commodity. So insurance companies tend to all look at claims as though a necessary evil. Everybody pays roughly the same amount of money to do claims. They pay the lawyers the same amount of money to defend them. And they've effectively come up with a pricing mechanism for what claims is in their business. So costs us, 15 cents out of every dollar on our combined ratio. And it's been like that for 100 years. So it's just a sunk cost. We'll spend all of our time thinking about every other part of our business, but we'll just ignore the 15 points that go out the door on claims. And I think that's an important thing for your viewers and your listeners to think about, which is if they look around the company that they may work for now, where's all their innovation coming? It may be in new digital apps to touch their client. It may be they have a new policy management system. Maybe they are really good at producing new products that sell to their agents. But how much time have they spent thinking about running their claims and their litigation departments in a way that can save them real money and be more efficient at what they do. And we have a saying at our firm, which is, we believe that the majority of the insurance industry, in essence, has gone into partnership with the plaintiffs bar. They've agreed that every claim has some value, and it's much easier for them to pay the claim and not admit guilt than to defend the claim in court. And that's just not the way that our firm is wired. We believe that there are legitimate ways to manage claims and manage litigation and get better results for our clients. And I can tell you, Wes, 3 or 4 anecdotes that just sort of surprised me, right? One of the reasons why the runoff industry, which is a business designed to get rid of old claims, one of the reasons why the runoff industry is so big now and is growing is because historically insurance companies did a poor job at managing claims. And those claims became problems and they weren't managed well. And now they've become a problem, and the insurance industry has to sell those reserves to a third party. Another example is how we deal with taking information that we learn about claims and using it to manage our underwriting departments better. We're not very good at taking basic information that we learn about claims and feeding it back into our organization to make us better at underwriting, exposure management, avoiding bad clients. I think it's also awful because so many insurance companies don't think of claims management as a customer retention tool. The thing that I always find interesting is you don't really think about your insurance until you have a claim. And then you call your agent up and say, hey, I need this claim paid. And how well they do it making your payment and interfacing you with their customer service can make or break your relationship with that insurance company. And so many insurance companies don't really give the care and attention to their claims department because it can be a huge advocate for their business, depending on how they deal with a claim and their philosophy around dealing with claims. So I think the word really is awful, and there's massive rooms for improvement in that business, both in terms of just process, philosophy of claims, and technology. And another thing which I think is important for your viewers, and maybe your viewers and listeners don't have a view on this, and maybe I'm sort of out on a limb on this one, but I worry about litigation finance tools coming into the industry. More and more investors are starting to pay for the ability to underwrite litigation. So they go to plaintiffs' attorneys, they give them a pile of money, and then the plaintiffs' attorneys go out and look for ripe cases to go off and try and settle with insurance companies. And one of the things that bugs me is that when I go and talk to insurance companies, I see no real recognition of that risk affecting how they manage and how they deal and how they finance their claims. So that's another area why I use the word awful to describe the state of claims and litigation management. And I also think it's been an area, frankly, where technology has had little to no impact for most companies. It's been an area where largely it's done as though you were at Lloyd's in 1880, where it was all done by paper and it's sent through pneumatic tubes from your lawyer to your insurance company. It's really sort of a backwater for innovation in most companies.
I mean, I think it's a perfect analysis. The only thing I can add to that would be to say that to do a comparison of that versus every other department. And if you were, the equivalent of that in underwriting would be saying, you should know who you're underwriting. And everybody in underwriting would say, duh. Or in distribution, or you should know which agents are the best. They would say, oh, duh. I mean, we've been fighting for that for 50 years. I got all the data on that. In litigation, they'll claim that they have this information, but as you dig deeper, you realize they can only tell you who the cheapest lawyers are to defend them. Can't tell you really much else because that's the only technology that's been offered to them. So I think that we can't turn you all into claims folks, but what I hope is that if you're just hustling and a scrapper, just looking for the best opportunity in an insurance company, that we sold you a little bit on claims, the least mature department with the most expensive vendors.
It is. And Wes, another point for your listeners to think about is, if they spend any time at all listening to sort of the public statements of these insurance companies, whether it's their read their annual reports or listen to their quarterly earnings calls. It's always about how they're growing their top line, how they're coming up with new products, an acquisition maybe that gives a new opportunity in a new space. A lot of insurance companies don't spend a lot of time talking about how they're streamlining process to make their claims experience better, how they're saving money for the shareholders and giving bigger bonuses because they're controlling costs. Oftentimes it's sort of a backwater where they use that backwater as a place to manage expenses. So there were a couple of, big mergers in the last couple of years, and some of the biggest casualties in those mergers were folks in the back office. The underwriting companies think about underwriting expansion. They don't think about claims process, and they think about underwriting expansion.
Yeah, 100%. So, okay. So let's bring it back. I want to, we're running up against time here. I want to kind of give you a chance. Again, my hypothesis when I called Nick in November of last year was people first, technology second, and innovating from within the industry. And you really won't hear those things anywhere else. You won't, you'll get marketing from insurtech companies every hour on the hour in an email or on LinkedIn or at a conference. You won't hear people first, technology second, and you won't hear innovate from within. So given all the stuff we've discussed today, from opportunities in the marketplace to claims litigation to 7 or 8 places ripe for technology / expertise and specialization, what do you think about my thesis on those themes, and do you have anything to add?
Well, I think your thesis is right on. In a way, the insurance industry should have large pools of capital, right? The big carriers. They should be experts in underwriting and expert in claims and experts in litigation management. And they should assign capital from the lowest cost providers. And those insurance companies should become good at what they do through the use of both really smart people who are focused on taking large amounts of information and processing it in the most efficient way, whether it's underwriting exposure information to understand what classes of business to underwrite, or claims team using data out on the web to understand how to deal with medical claims or liability claims, or using data to understand how to defend a lawsuit because you've been sued. I think insurance companies, if they can operate more like those areas of expertise and then think about capital second, i.e. go get capital when they need it to underwrite, then you'll see more innovation take place inside of larger carriers. But I'm excited because I think, in a way, I think this is the era for the smaller companies. I think the larger companies will continue to get larger. They'll buy each other up and they'll cut expenses to improve their operating margins. But that will leave a ton of areas for experts and because remember, what's insurance? It's a people business, right? At the end of the day, so if a group of people leave another carrier, they'll take relationships with them, whether it's underwriting relationships so they can underwrite a new class of business. Now, instead of being under an insurance company umbrella, they started managing general agent and the underwrite. The expertise available to hire is to support claims, to support litigation. Those are all now available. So these smaller entities can now become really active participants in the industry without having to have a big umbrella or a big brand behind them to support them. So I'm excited for it. I think firms like you and ours will do well in that environment because people will need that technology. They'll need that expertise to help them at a cost-effective way and in a manner that gives them access to more expertise than they would have if they were just doing it on their own.
Yeah, no, I couldn't have said it better myself. I think that's just exciting stuff. Just thinking about 10 years from now, someone listening to this is just, thinking about how this market's going to look different and just taking the right guess, educated guess, because you follow all this stuff. You're on Insurance Nerds. You're reading all the information. You're not just following the the articles written by the outsiders. You're literally listening to the people in the industry. You're going and department to department, learning different things. It's just very exciting because I completely agree with you. I think this industry will look completely different in a few years. And, at the end of the day, you're going to have to take a guess. But if you guess right, I mean, you're going to crush it. There's going to be just such a huge opportunity. And, I can tell you that from experience. I did not know that claims litigation was the problem that it was nationally. Turns out it's way bigger than I thought. Go with your expertise, learn as much as you can. But yeah, I mean, to your point, like if you stay within your expertise and you focus on talent and people around you, you're gonna be in good shape because you're gonna keep listening to people, you're gonna keep meeting people, and you're just gonna continue to develop those ideas. So I love it. So with that, I am going to wrap things up. David, phenomenal insights. Where can people reach out to you if they need to reach out to you?
Well, we certainly would encourage people to come at us either on our website at gramercyrisk.com, or if folks want to reach out directly to me, my phone number is 516-962-4618. And I suspect the podcast will probably have my email address, but it's dmocklow@gramercyrisk.com.
Yep. No, DMOCKLOW at gramercyrisk.com. Yeah, I really appreciate it. Everybody, please take him up on it. He's not kidding. He'll get right on top of it and he'll help you out. And same for me. That's what Nick has done for everybody. That's what Tony's done. It's what all the insurance nerds have done. Carly, that's Rob. That's what we want to do. So we're just grateful to be able to do this podcast. David, any big announcements before I cut off and we move on?
No big announcements, but I will tell you I'm excited to be working with you and your team. You guys have been a great company to work with. We're excited about those kinds of in the industry and what it means for some of our clients. So thanks for all your hard work as well, Wes.
So are we. So, hey, everybody, if you made it this far, reach out to David. Reach out to me, Wesley at caseglide.com. We're here to help. I don't care if you're in a call center like, Tony always talks about, or if you're the chief claims officer of a large company. Let's talk. Let's make introductions. Let's strategize together. This is an amazing industry. You guys are a select group that listen to this podcast. And, thank you, Nick, for allowing David and I to run roughshod over your beautiful piece. I hope we didn't destroy it. Hope we didn't destroy it, but I think we did all right. What do you think?
I think we did pretty well.
Awesome. Well, with that, thank you for another episode of Profiles in Risk. Thank you, David. Signing off, everybody. Can't wait to hear from you.